All right, let's talk a little bit more about kind of where the money is being spent in the economy right now. The market, of course, this week is awaiting key data on payrolls and inflation. Based on what you're seeing in terms of your 68 million consumer customers and 3 million businesses that you serve, do you think we're at an inflection point in either of those key data points?
Look, I see that there's a lot of talk about the retail sales number for December. It's mid-February. Let me tell you that in the month of January, we saw our retail consumers, the 68 million you said, move 5% more money in the economy than they did last January. That's very consistent with a strong economic growth environment. And that number has stabilized and been pretty strong. Fourth quarter about the same. This quarter strong. December sales are a little bit affected if you looked in our data by how the holiday season fell and things like that. But overall, the consumer is spending. And if you look at it by cohorts of low, middle, and higher earning people, all are growing. They're just growing at different rates, and that's part of the K economy, affordability, and all the discussion going on. But the consumer is spending money and continues to put money in the economy. And if you think about it, as we have said for many years, Leslie, in talking to you, look what they do, not what they say they're going to do. And if you look at what they're spending on in January, they're spending on trips, they're spending on things. Some of the big ticket items came down a little bit, but the amount they're spending went up in the aggregate. So there's a story there which says the consumers are employed, earning money, and are being careful when they can be careful, but are also making sure they protect for their family and ability to take the vacation and things like that.
Yeah, it being more choiceful. There's a lot, of course, also going on in D.C. that could impact the banking industry specifically. Some perceived as a potential positive, such as overhauling supervisory functions, potential capital reform. Some perceived as negative, though, such as credit card interest rate caps, stablecoin yields, debanking noise. Net-net, would you characterize all of these positives as favorable, or all these policies as being favorable or unfavorable as you kind of pull them all together?
Overall, the industry is going to reflect the economy, and that's favorable, and it's going to reflect the regulatory balance being put back in. So starting after the financial crisis, we had to build up a regulatory activity which was justified based on getting people in the tent during the financial crisis, fixing capital, liquidity, and all those stress testing, which has been consistently run. It just never stopped, and it should have, because frankly, once you get to a certain point, you got to let the banking system do what it does, which is support the economy, and it didn't stop. So that pendulum is swinging back, and we want it to be swung back in the middle on very sound foundation, so it will stick to the ribs going forward. I think the other major, so that's capital liquidity. The other major thing is focus on materiality. And at the end of the day, these enterprises are running huge amounts of activity, and at a Six Sigma level, you're going to have a couple mistakes. And if it's not material and you have the systems and controls and data protection, why should it be a matter of significant import if you have one error out of 10 million or something like that? And I think getting that balance back is also critical to the people who operate, so we can put more money into helping the economy, helping the technology, applying technology, helping customer satisfaction grow, and less into writing paperwork about something that was not material by definition. So that's going on. On the other issues, I think they'll be neutral and fine for the banking industry, because at the end of the day, what we do is we help translate America, companies and consumers to the market and vice versa. And I think that role is one of the strongest industry in the world. The world envies what we have in our financial services system with all its diversity and all its capabilities, from private capital to bank loans to all the different things that happen to different types of payment systems. And so the competition will win out, and I think it'll all be positive in the end of the day. But underlying that, getting that regulatory pendulum to swing and sit in the middle is important, because swinging it back and forth makes it very hard to operate a company for the benefit of our customers and clients.